am Zara Fatima. Welcome back to my channel. Students, today in this video I am going to explain you the subject cost control and management accounting. The subject cost control and management accounting is for the students of BCom third year semester 6 students of Usmania University. In my last videos I already explained you the chapter marginal costing. Under that we have completed 10 problems, and recently I uploaded one video on the unit 3 chapter standard costing and variance analysis, and now in this video I am covering the unit 4, that is fund flow analysis. Some of my subscribers, they request me to explain unit 3 and unit 4 because they have the examination. So in my last video I covered the unit 3. Now in this video I am covering the unit 4, that is fund flow analysis. So this video is especially for my subscribers who request me to explain unit 3 and unit 5. So students, unit 3, that is standard costing, and unit 1, that is marginal costing, that is completely based on formulas. The standard costing, marginal costing and ratio analysis, the topics are completely based on formulas. So students, you must have the command on the formulas, then you will be able to do the problems easily. And on my YouTube channel, the formulas for marginal costing, the formulas for ratio analysis and formulas of standard costing is available. So please visit there, see the videos, you will find all the formulas for all the chapters. Now this unit, that is unit 4, that is fund flow analysis. So students, tomorrow you have the exam. So I will explain you the problem with your examination point of view, so that it helps to you to score maximum marks in your examination. So students, see the video and like this video and share the video with all your friends, so that you and your friends will score higher marks in your examination. Now see what is unit 4. Unit 4 is fund flow analysis. Under fund flow analysis we have to prepare the fund flow statement. But before preparation of fund flow statement, we have to prepare 2 more statements. The first statement is working capital statement and the second statement is funds from operation statement. Then we will be able to do the fund flow statement easily. So the question is, the following is the information is extracted from the financial statements of Abhinav Limited as on 31st March 2016, as on 31st March 2017. So information of 2 years are given, 2016 and 2017. Now the question is, share capital 4 lakh, 6 lakhs, reserve and surplus 2 lakh 50, 3 lakh 50, depreciation fund 80,000 and 1 lakh 20,000, bank loan 1 lakh 60,000 and 80,000, sundry creditors 1 lakh 20,000 and 1 lakh 35,000, proposed dividend 40,000 and 60,000, provision for taxation is 40,000 and 55,000, land and building at cost 3 lakh and 4 lakh, plant and machinery at cost 4 lakh 60 and 6 lakh 30, inventories 1 lakh 80 and 2 lakh, sundry debtors 1 lakh and 1 lakh 55,000, cash and bank balance 50,000 and 15,000. Now the other information is also available, that is machinery which was purchased earlier for rupees 60,000 was sold for rupees 4,000, and the book value of the machine was 6,000. The company also purchased new equipments during the year. And the second bit is given, the company has issued new shares to the extent of 2 lakh for cash. You are required to prepare number 1, statement of changes in working capital, and number 2, statement of sources and application of funds. Statement of sources and application of funds is nothing but fund flow statement. So it is asking you to prepare the statement of working capital and statement of fund flow, sources and application of fund. So before preparing the statement of sources and application of fund, we prepare the statement of changes in working capital. So statement of changes in working capital. The formula of working capital is current assets minus current liabilities. Now, what are the current assets? Current assets are cash in hand, cash at bank, bills receivable, debtors, stock, short-term investments, prepaid expenses. These are the current assets. And current liabilities like creditors, bills payable, bank overdraft, outstanding expenses, provision for taxation, proposed dividend. These are the current liabilities. Current assets, those assets which can be converted into cash within a period of 1 year. And current liabilities are those liabilities which we have to pay within a period of 1 year. So current assets and current liabilities we need for preparing the statement of changes in working capital. So this is the statement of changes in working capital. The format is particulars, previous year, current year, changes in working capital, increase and decrease. Here 2 years information is given, 2016 and 2017. So 2016 is our previous year, or we can say base year, and 2017 is our current year. Now changes in working capital, the change may be increase or the change may be decrease. So increase and decrease. Now for working capital statement, first we have to write current assets. This is the heading. Under current assets, in the question, current assets are inventories, debtors, cash and bank balance. These are the current assets. And land and building, plant and machinery, these are the fixed assets. And current liabilities are proposed dividend, provision for tax, sundry creditors. These three are the current liabilities. So for preparation of working capital statement, we need the current assets and current liabilities. Now first, current assets. Under current assets, first is inventory, second sundry debtors, third is cash and bank balance. Inventories 2016 it is 1,80,000, 2017 it is 2 lakh. Debtors 1 lakh, 1,50,000, 55,000. Cash and bank balance 50,000 and 15,000. Now total of this current assets 2016, the total of current asset is 3,30,000 and total of current asset 3,70,000 in 2017, and we are representing the total of current asset is A. Now next is current liabilities. Current liabilities, under that first we have sundry creditors, proposed dividend, provision for taxation. 2016 creditors 1,20,000 and 1,35,000, 40,000, 60,000, 40 and 55. Total of current liabilities 2016 it is 2 lakh, 2017 it is 2,50,000, and we are representing current liabilities as a symbol B. Current assets A, current liabilities B. Now working capital. Working capital formula is current assets minus current liabilities. Here for current assets we are representing A, for current liabilities we are representing B. So current assets minus current liabilities. 3,30,000 minus 2 lakh, 1,30,000. Second year 2017, 3,70,000 minus 2,50,000, 1,20,000. This is our working capital, A minus B. Current assets minus current liabilities. Now we have to take the change, increase or decrease. Now 2016 our inventories are 1,80,000. In 2017 our inventories are 2 lakh. So comparing to 2016, in 2017 the value of inventory is increase. How much increase? Take the difference. 1,80,000, 2 lakh minus 1,80,000. Difference is 20,000. Our inventory is increase because in the last year it was 1,80,000. In the current year it is 2 lakh. So the change in inventory is 20,000 and that change is increase. So write the change in increase column. Debtors 2016 it is 1 lakh and in 2017 it is 1,55,000. So comparing to 2016, our debtors in 2017 are increased by 55,000. So take the difference in increase column. Now cash and bank balance in 2016 it is 50,000. In 2017 it is 15,000. Now here in case of cash and bank balance, in 2017 our cash and bank balance will decrease because in first year it is 50,000, in second year it is 15,000. So 50 minus 15, 35,000 is the decrease, and that decrease we will write in the decrease column. Now come to the current liabilities. Under current liabilities, first creditors. Our creditors in 2016 it is 1,20,000 and 2017 the creditors are 1,35,000. Here creditors are increased 1,20,000 to 1,35,000. The difference is 15,000. Here creditors are increased, but we have to write the difference in decrease column. Opposite we have to write in case of current liabilities. Whereas in case of current assets, whether it is increase, simply we have to write in increase column. If it is decrease, we have to write in decrease column. But in case of current liabilities, we have to write opposite. If the liability is increase, we have to write in decrease column. And if the liability is decrease, we have to write in increase column. Now, proposed dividend 40,000, 60,000. Again, it is increase. So, write the difference in decrease column, 20,000. Provision for taxation, again it is increase, 40,000, 55,000. Difference is 15,000, increase. So, we have to write in decrease column. Now, total of this increase and decrease column. Increase column 20,000, 55,000, that is 75,000. This decrease column, the total is 85,000. Now see, in increase column it is 75,000, in decrease column it is 85,000. So we have to see which column is more. So here the total of decrease is more. So we have to write here decrease in working capital because total of decrease is more. So decrease in working capital, and we have to take the difference of increase and decrease of working capital. 85,000 minus 75,000, the difference is 10,000. And here we write decrease in working capital, but the difference we will write in the column increase in working capital. Now the total of, the A minus B working capital, 2016 it is 1,30,000 and in 2017 it is 1,20,000. So again here we have to take the difference, it is 1,30,000 and here 1,20,000. Difference is 10,000, we have to write here 10,000. Now total of these four columns, 1,30,000, 1,30,000 because 1,30,000 is more, and here 85,000 both the sides. So this is the working capital statement. Now next statement we have to prepare statement showing funds from operation. But before preparing this funds from operation, we have to do some workings because one of the part of machinery was sold during the previous year. So we have to prepare the machinery account to find out how much machinery further we purchase or sold. So machinery account on cost. First we write to balance brought down, that is opening balance of machinery. Opening balance of machinery we have 4,60,000. 4,60,000, and credit side by cash, the sale value of machine which we sold during the year was 4,000. Machinery which was purchased earlier for rupees 60,000 was sold for rupees 4,000. This is the sale value. So this one we have to write by cash, sale value 4,000. And the book value of the machine was 60,000. Book value of the machine was 6,000. The company also purchased new equipment during the year. We need the depreciation of machinery sold. The depreciation is not given. It's given the cost value and the book value. So depreciation we can find out from cost, we subtract the book value. Cost minus the book value, we get the depreciation. The cost of machinery sold was 60,000 and book value was 6,000. So 60,000 minus 6,000, 54,000 is the value of depreciation machinery sold. So by depreciation 54,000. Now we have to find out whether we are getting profit or loss on sale of that particular part of machine. So again we calculate here. The cost of machine is 60,000 less depreciation 54,000. Just now we find the book value is 6,000. 60,000 minus 54,000. 6,000 is the book value. The sale value of the machine is 4,000. It's given the question. So from the book value subtract the sale value. 6,000 is the book value, 4,000 is the sale value. The difference is 2,000. Here sale value is less than book value. So whenever sale value is less than book value, the difference is called loss. So this 2,000 is the loss on sale of machine. So loss comes credit side. By profit and loss account 2,000. Then by balance carried down, the closing balance of machine 6,30,000. Now you have to do the total. So credit side we have 6,90,000. Debit side we have only one figure, that is 4,60,000. So we take the difference. The difference is 2,30,000. So in machinery account the difference is arising on the debit side. So in asset account, if the difference arise in debit side, that represents we purchase further more machinery. So here new machinery purchase 2,30,000. So that to cash in bracket purchase, that is the balancing figure, because we find this figure by preparing this account. Now one more ledger we have to prepare, that is depreciation of machinery account. In the question depreciation fund is given. So opening balance of depreciation comes credit side 80,000 and the machinery sold is 54,000, that we write on the debit side. To machinery account 54,000 and closing balance of depreciation debit side 1,20,000. Now 54,000 plus 1,20,000, the total is 1,74,000. So from this 1,74,000, if you subtract this 80,000, the difference comes on the credit side, and that difference represents current year depreciation, and that is rupees 94,000. 1,74,000 minus 80,000, 94,000. This is our current year depreciation. We need this depreciation for preparing the funds from operation statement. Now with this we complete the working notes. Now the next statement is funds from operation statement. Statement showing funds from operation. This is the second statement. So for preparing this funds from statement, in the question it is given reserve and surplus. So sometime it is given reserve and surplus, sometime it is given profit and loss. So profit and loss account or reserve and surplus, whichever is given in the question, that we have to write first. So first closing reserve and surplus. Closing is current year 2017 reserve and surplus balance, that is 3,50,000. Then afterwards you have to write the heading add non-cash and non-operating expenses already debited to profit and loss account. Under that first take this depreciation of machinery. Current year depreciation of machinery 94,000, and one more non-operating expenses is there, that is loss on sale of machinery, that is 2,000. So here loss on sale of machinery 2,000, 94,000, 2,000, 96,000. 3,50,000 plus 96, 4,46,000. Then less non-operating incomes. In the question there is no non-operating incomes, but you have to write the heading. So no non-operating incomes, that is nil. So same figure carry here. Then less opening reserve and surplus. Opening is the reserve and surplus of 2016, that is rupees 2,50,000. So 4,46,000 minus 2,50,000, it is 1,96,000. The positive figure is there. So this figure is called funds from operation. Now statement of changes in working capital and statement of funds from operation and working parts are over. Now the last statement, that is statement of sources and application of funds, that is fund flow statement. Now this is the fund flow statement. Here sources, amount, application, amount. Sources side, whatever funds we are getting, the inflow of fund we have to write on the sources side, and whatever fund we are utilizing, the fund which is move on, outflow, that comes application side. So first, decrease in working capital 10,000. So decrease in working capital is a source and increase in working capital is an application. So decrease in working capital 10,000 and funds from operation 1,96,000, that also comes sources side. Now afterwards you have to see the fixed assets and long term liabilities. So under fixed assets, plant and machinery is there. For plant and machinery we prepare the account. So by preparing the account we find how much machinery we purchase. So we purchase 2,30,000 new machinery during the year. So purchase of machinery is an outflow. So application side, machinery purchase 2,30,000. But one of the part of machine we sold. So sale of machine, that is inflow. So sources side, sale of machine 4,000. Next we have land and building. In land and building, first year it is 3 lakh and in second year it is 4 lakh. Land and building are increased. That means we purchase the building. So purchase of building is an outflow. So application side, building purchase. Take the difference. Difference is 1 lakh. Now other liabilities except current liabilities. Except current liabilities, the other liabilities are share capital, bank loan. Under share capital, first year it is 4 lakh and in second year it is 6 lakhs. The change is 2 lakhs. Share capital is increased. That means we issue the share. So cash is inflow. Issue of shares. Difference 2 lakh. And bank loan, in first year it is 1,60,000 and in second year it is 80,000. The loan is decreased. That means we paid the loan. So payment of loan is an outflow. So application side, bank loan paid of 80,000. Now if we add the sources side and application side, both the side we will have the same value. We will get the same value. If we not get the same value, that means we have done any mistakes in the statement of working capital and statement of funds from operation. So here we are getting 4,10,000 on the sources side and application side 4,10,000. So students, this is the unit 4 fund flow analysis. Under that we prepare fund flow statement. But before preparation of fund flow statement, we prepare working capital statement and funds from operation statement, and we have done the working parts. So this is the question, and this question is very important from your examination point of view. So students, like and share this video with all your friends so that you and your friends both will be benefited from our lecture, and so that you can score higher marks in your examination. And if you like the video, then give a like, and if you not subscribe my channel and if you are new to my channel, please subscribe my channel so that future notifications related to my future videos will come to you directly. And students, stay connected with us for many more important questions of your other subjects also, and inform your friends about the channel, about the important questions which are available on my YouTube channel. And on my YouTube channel, important questions, theory important questions for this subject, cost control and management accounting, is also available. So visit there, see the videos, like the videos and share the videos with all your friends, and stay connected with us for the upcoming videos. And don't forget to subscribe my channel, and don't forget to share the videos with all your friends. And all the best for your examination. Thanks for watching the video.